Welcome back. You're with us on Trading Hour. As promised, let's get that conversation going around the aviation space to find out how, trends are like as we look at FY25. We've got the aviation data for the month of March that's come in just very, very recently. It's showing stable sector trends with the continued recovery in domestic as well as international air passenger traffic. Domestic passenger traffic in the month of March is up by almost 7%. This is on a month-on-month basis, while it saw a 13% jump on a year-on-year basis in all of FY24 in the entire year. To discuss these trends and, of course, the outlook going forward, we have with us Kinjal Shah, Vice President and Co-Group Head of Corporate Ratings at ICRA, to take some questions. Kinjal, thank you very much for joining in. So let's just start by wrapping up FY24. Which are the most dominant trends that stood out for you? And just purely in terms of, total passenger traffic, where are we vis-a-vis the pre-COVID peak levels?
Yeah, thanks. See, we ended FY24 with a domestic passenger traffic of 154 million. Which is 13% growth on a YY basis. But as regards the pre-COVID levels, we had seen a peak of 141 million, which was in FY20. So post that peak, 154 million is the overall peak that we've seen in FY24. So a significant growth over the pre-COVID levels. That's on the domestic passenger traffic. The other trend which we have seen is on the ATF prices. So in fact, ATF prices in FY24, they declined by 14% on a YY basis, but they remained higher by around 58% compared to the FY20 average levels. So significant elevation in the ATF prices compared to the pre-COVID levels. The third key trend, I think, which we saw is a lot of grounding on the aircrafts in the current year due to engine-related issues. Overall, our estimate is that for as of March 2024, around 24 to 26% of the fleet of the Indian airlines was grounded, which is again a sizable capacity decline for the industry because of the engine-related issues with the Pratt & Whitney engines.
Absolutely, Kinjal, and that's the most important point, because like you mentioned, that total air traffic is above the pre-COVID peak. In fact, I think if we just do the numbers, 145 versus 154, we're talking 6-7%, at least 7 to 8% higher than the pre-COVID level. And at the same time, we have this capacity crunch that has crept in because of either the, the insolvency of some carriers, the Pratt & Whitney engine issue, etc. How big is the gap between demand and supply? Any way of quantifying that? You mentioned that capacity has fallen by 24%. So what's the gap in demand and supply that we are talking about, which will then lead us to the next part of the conversation, the overall average increase in fares that we have seen in this year?
Right. As of now, see, we're not seeing a significant gap in the demand and supply. What we're seeing is increase in the overall passenger load factors of the airlines. Because of this capacity constant, we've seen that for most of the months in FY 2024, the passenger load factors were in the 90s. So average passenger load factor has been significantly higher, about 85 to 90% in FY24. That demonstrates the gap in the demand supply that we're talking about.
Okay, and do you have a handle on the average increase in fares we saw in FY24? Before we start with our FY25 questions, what's the overall increase in fares?
Overall, I think it would be somewhere around 20 to 25%, but obviously it varies a lot depending on the sector, the time of the travel, etc. But average, if you see the REST, which one tracks as an operational metrics in the aviation industry, the revenue per available seat kilometer, those we would have seen an average increase of around 20 to 25%.
Yeah, so I just wanted to, clarify and quantify the numbers, because we all feel the pinch every time we're booking a flight. Now we know the ICRA numbers kind of, give a ballpark estimation of 20 to 25% increase. Pretty similar to what I think, we feel in our heads as well. But, Kinjal, let's come to FY25 and talk about the trends over here and also market share. How are you expecting the market share pie to sort of be in this year? Will Indigo continue to dominate? I mean, very recently we saw Vistara run into troubles with, pilots and rostering, etc. So just in terms of market share projections going forward, what's your overall call?
So I think, again, one will have to look at it because, see, there is a consolidation happening between the Tata Group Airlines in terms of Vistara and Air India. and AirAsia. So one has to see that consolidation, when does that pan out exactly? And then obviously the other clear leader is Indigo. So there would be these two, I mean the Tata Group and Indigo, who would continue to dominate the market share of the entire aviation industry.
Okay, Kinjal, now let's come to financials because that is of prime importance to us. I mean, a lot of investors were looking at the listed entities, the stocks as well. How do you describe the financial profiles of the Indian carriers right now, listed or private sector? And sort of what have been the key trends? And also when you talk about whether it's debt levels, looking at the sustainability of that debt, looking at profitability trends, how do you expect FY25 to be for these carriers?
Right. So we've said that obviously, let me just give you the FY24 estimate, which will give some idea about how the things have panned out. So because of this significant increase in the demand and the decline in the ATF prices that one witnessed, we are expecting that the loss for the Indian aviation industry would decline sequentially on a YY basis to around 30 to 40 billion rupees. As against our estimates of FY23 loss at around 170 to 175 billion rupees. So there would be a sharp decline in the net loss for the Indian aviation industry. We expect in FY25 the domestic passenger traffic to be witnessing a similar growth of around 8 to 13% on a YY basis. And we would again, I mean, assuming that the ATF prices remain range bound and do not materially increase, we expect that the net loss for the industry should be at a similar level of around 32 billion rupees in FY25. Because of the price increase that we've already seen here, we do not expect the yields to improve significantly further because of the demand-supply mismatch that we'll be seeing. So our expectation is that FY25 would also see a similar net loss of 30 to 40 billion rupees as we are expecting for FY24 as well.
Yeah, that's assuming, of course, we don't run into an oil shock and then things don't completely go ballistic on the oil and the ATF front. But, you know, working with that assumption of range-bound ATF prices, is there any further headroom to improve load factors? Are you expecting that? And if so, you know, which carriers perhaps could push the envelope? And also, I mean, any resolution in sight on the Pratt & Whitney issues, just getting more capacity back in the sky?
See, on the oil,
on the load factors, yeah.
Load factor. So like I said, I mean, load factors are anyways quite high as of now, around 90% plus. So I think at least over the near term, we would continue to see the load factors remaining at similar levels. I mean, a material increase on the load factors would not be possible because travel doesn't happen consistently across months similarly. So some kind of load factor slowdown will happen during the lean season. Peak season would see a higher increase in the load factors. So overall average load factors would remain at similar levels of around 90% plus. On the Pratt & Whitney, I think Pratt & Whitney has seen worldwide issues. I mean, it's not just Indian carriers who have faced the engine issues. So they are actually stuck up with a lot of repairs for these engines. And the repairs estimates is, I think, significantly higher, as in terms of the timeline that the repairs would take is going to be significantly higher. What we are seeing for the Indian airlines is that they are actually entering into some spot leases for some of the aircraft, and we're seeing a lot of these on-spot leases aircraft being onboarded so that they can use the capacity while the peak demand is there during the peak travel season in the summer. Obviously, this will result in an increase in the cost for the airlines because the on-spot leases will anyways be much higher than what they would pay for the other leases. As also, they would also have to bear the charges of the aircraft on ground. So parking charges, etc., which is again a cost element for the airlines. The third thing that is there is that at least from the public commentary by some of the listed airlines, we heard that Pratt & Whitney is also compensating them for this loss which is happening. One doesn't really know the quantum of that loss, but to some extent there will be a compensation which is available. So this will be monitorable as to how and what kind of compensation does Pratt & Whitney provide.
Okay, thank you very much for that. By the way, tomorrow, of course, is a holiday, but on Thursday, it's an important session. Infi and Bajaj Auto will be reporting numbers, and you also have HDFC Life and Mastech. So not to forget that, earnings season has begun.
Geopolitics, earnings season, commodity prices shooting up. It's all happening right now.
It's all happening right now.
It's really, really busy. Well, as we're, drawing to a close on this edition of Trading Hour, let's leave you with a snippet of a conversation that I had